We're seeing softer market conditions, and that's really being led by Sydney and Melbourne.
Homeowners reaped record gains in the first quarter of this year, even as housing market momentum began to cool. That's according to Cotality's Pain and Gain report, which says the national resale profitability rate saw its highest level in more than 20 years.
So nationally, we saw a median gain of 377,000 spread across the country, but we saw much stronger profitability in Brisbane, Adelaide and Perth. So Brisbane, we're looking at a median gain of about 525,000, Adelaide close to 475, and Perth at a similar level as well.
Cotality says those who sold for a loss were more likely to be recent buyers, with many purchasing around the market peak in late 2021 and early 2022. The median loss remained unchanged at $45,000. As the discussion continues about how much of an impact the federal government's property tax changes have already had on house prices, the Treasurer has sought to clarify comments by Housing Minister Clare O'Neill that the market is already in the midst of a correction.
We see periods of very significant house price growth and then we see the market make a correction, and that's what we're seeing at the moment.
So we're in a market correction now?
That's correct. I don't think that's controversial at all.
Later, Jim Chalmers said the minister meant to use the term correction colloquially rather than in a technical sense. A technical correction means a fall in market prices of between 10 to 20%. For a look at what is expected to happen to property prices in the coming financial year, Domain has given the business an early look at its forecast. Chief Residential Economist Nicola Powell joined me. Welcome. Can you explain whether the housing market is already experiencing correction?
We are seeing softer market conditions, and that's really being led by Sydney and Melbourne, and we're seeing that come out in weaker clearance rates. I think a correction would be where we're seeing a significant drop in property prices. I'm talking in excess of 10%, and that is not what we're currently seeing unravelling. We are forecasting further price falls, but not in excess of that 10% mark.
Why don't you expect prices to drop by that amount? Morgan Stanley is saying they could drop by at least 10%.
I think we've got to remember there are different dynamics across our different capital cities, and we still have an undersupplied housing market. And there's two really core things that are going to continue to support property prices. The first one is behavioural, and what you'll see is sellers will eventually pull back. They won't sell their home if they think they're not going to get the value that they think their home is worth. And then construction costs. It is still higher cost to replace a home than it is to buy an established home.
Which cities are likely to see the biggest price declines in the 12 months from July?
We're expecting the biggest price declines to be coming from Sydney and Melbourne. We've got a forecast decline of up to 8% in house prices in Melbourne and up to 7% in Sydney.
And on what interest rate scenario is that based on?
So we are forecasting that we are at a cash rate peak, but there is a risk that we may see the RBA hike one more time. And I think if we do see another rate hike coming through, what it means is our forecast will likely see the lower range materialise. And we produce a range, a short range, a lower forecast and then an upper forecast range.
Okay, so can you explain to us then in a little more detail about the magnitude of the declines you're expecting in our biggest cities based on the different interest rate scenarios?
So I think if we do see another rate hike coming through, I think it's quite realistic that we could see, say, Sydney house prices see that 7% fall. So that means about $120,000 shade from that median house price. I mean, that's not an immaterial reduction in home price. I think, though, if we see rates held as they currently are, our lower range forecast or our upper range forecast is around that kind of 3-4% mark.
Okay. You are forecasting that the Melbourne median could fall in the next year to under $1 million?
This is a real milestone, I think, for Melbourne's housing market, and we know that Melbourne has underperformed over the past 5 years compared to other capital cities, and we are expecting conditions to remain weaker over the rest of this year and into the first half of 2027. And that means that we could see that median house price dip below $1 million for the first time since 2021. So this is a really significant change in the affordability landscape across our different capital cities.
Are there major differences, Nicola, in the likely performance performance between the upper and lower segments of the housing market?
I think so. I think our forecasts are expecting the entry segments, the more affordable segments of our housing markets to outperform. That means unit prices. So we've got many of our capital cities forecast to see better conditions for price growth compared to house prices. But even when you look at house prices, we're expecting the entry segment of our housing market to outperform, probably particularly in a market like Sydney, which is very stretched in terms of affordability.
We've concentrated on price declines, but there are cities which continue to see price growth, among them Adelaide, Brisbane and Perth. Do you see those cities continuing to be in positive territory in the coming year?
We are expecting continued growth in these three capital cities, but the way I would describe it, these markets have almost been unstoppable in recent years. It's like going from the highway down to a school zone. So we are expecting growth to slow. We are forecasting single-digit increases in both house and unit prices, and we are picking Perth to still be the top performer nationally.
What is still pushing those cities higher?
They really have a lack of supply overall, and also they still have very, very tight rental markets. And most of them still have strong population growth, particularly when you're looking at southeast Queensland and even into WA. And I think these dynamics are still helping to prop up price.
Can you explain to what extent the government's tax changes are influencing the market conditions currently?
I think it is influencing behaviour. We've almost seen that instantly occur. I mean, we have to remember, though, the market was softening even before those budget leaks were coming out. So we had this cyclical nature occurring across our housing market, but what we've got is structural changes occurring on top of those cyclical dynamics that have been unravelling. I think, though, we've got to remember that these tax changes really kind of tinker with the housing market at the edges. I think it is going to shift behaviour. I think we will see a pullback in investor activity. We've got to remember that roughly about 40 cents of the dollar in home lending is to investors. And those markets that have a greater exposure to investor activity are much more vulnerable to those changes in buyer segments. So it is states like New South Wales.
Is Treasury's forecast of a 2% change as a result of the changes, 2% to house prices, realistic?
Look, I think that part of the forecast is quite realistic. I think our concern comes more in what is the dynamics that are going to unravel in the rental space. And so I think that there was a $2 figure around the impact on increasing asking rents, but our expectation is we'll likely see a far greater impact on asking rents. So I do think that there is some short to medium term pain coming for tenants.
Okay, just finally on that question, what exactly do you expect in terms of rents as a result of the forecasts you've already outlaid to us for the coming year?
We're expecting rents to re-accelerate. It's been a very interesting dynamic. We still have a landlord's market across Australia, but we had seen this dynamic where tenants had reached that affordability ceiling. So there was almost this non-relationship between where the vacancy rate was and what was translating into rental price increases. I mean, in Sydney, they had stabilised. We are expecting them to re-accelerate, and I think tenants will be facing record high rents.
Nicola Powell, thank you.
Thank you.